Yes, hello students. Welcome to the true or false video. Okay, you know that first 6 questions in your question paper is true or false, and that comes for 12 marks totally. So if you can get this 12 marks very fast in the examination, obviously it's a confidence booster. So after that, your confidence you can carry forward to the other things. So 100 questions we have taken. Okay, most expected questions. Usually it is repeated. It's again and again repeated. If you have seen all the RTPs and PYPs and all, questions are repeated again and again. So from there, I have picked some questions. Let's go to the first one. Okay, a tallied trial balance conclusively proves that all transactions have been correctly recorded according to accepted accounting principle. Does it mean that tally trial balance means everything is correct? No, because there can be compensating errors, there can be errors of principle, okay, there can be errors of omission, all that will be there, and still the trial balance might tally. So the answer is false. Okay, this material will be shared, guys, in the description. It will be there. So if you want detailed explanation, it will be there. Okay, quick explanation I'll be giving so that this is just for revision purpose. You can read the detailed explanation over here. Now, trade discount is allowed mainly for prompt payment and is recorded in the books of account. Trade discount is for what? Prompt payment. No, prompt payment discount, which is it? It is cash discount. So this is also false. Next, if closing inventory is overstated. Overstated means what? Closing inventory is more. Closing stock is more. Gross profit and net profit for that accounting period will be understated. If closing stock is more, profit will be more. You can just take a trading account and you can write over here. Imagine you put 100 over here, that will impact the profit over here. If you make this 150, it will impact the profit this side. Is this clear, guys? Yes. Next, interest on debentures need not be paid when the company has incurred loss. Nothing. It's like you have taken loan. If you have taken loan, whether the company is profitable or it is in loss, you have to pay interest on debentures. So this is also false. Goodwill is an intangible asset and therefore it cannot be valued. It can be valued. Okay, so this is also false. In fact, in partnership, we have so many ways to compute goodwill. So this is also part. If this is not possible, no. Entire partnership, which is this much, it will become this much. Correct? Because everywhere goodwill calculation only is the major thing. Next, in a bill of exchange, the drawer and payee must always be the same person. Drawer and payee. Drawer is the person who is drawing the bill. Payee is the person who is supposed to get the bill. I only drew the bill. I only should get the amount, or no. I can always tell pay to the order or pay to the bearer. It can go to the bearer as well. Clear? Next. Refundable laboratory and library deposits collected from students by an educational institution are shown as liabilities. You have collected deposit. That means someday when the student leaves, you have to give the deposit back. So obviously this is true. It's a liability. Clear? Next, a company continues to exist despite death, insolvency or change of its members. Remember, joint stock company, people may come, people may go, but company stays on forever. Therefore, this is true. Clear? Now, and one of the features of company is what? Separate legal entity. Salary paid in advance is an asset and not an expense of the current period. Salary paid in advance. You paid salary of the upcoming period. So obviously it is an asset. It is a prepaid expense and that's why it is true. Why is it not of the current period? Because you paid salary of the next period. It should be shown as expense in the next period. Now, a receipt and payment account records only revenue items relating to the current accounting period. Receipt and payment account, will it record only revenue items? Receipt and payment account is what? It's like cash book. Cash book will have all items, but it should be received or it should be paid. Which one will record only revenue items? Income and expenditure account will record only revenue items. So this is false. Next. Under Garner versus Murray, an insolvent partner's deficiency is borne by solvent partners in their profit sharing ratio. No, it is borne in what ratio? Capital ratio. So this is also false. Proceeds from a fresh issue of debentures may be used for redemption of preferences. Proceeds from fresh issue of debentures may be used for redemption of preferences. Proceeds from fresh issue of shares can be used for redemption of preferences, but it cannot be from fresh issue of debentures. That's why this is false. Clear? Next, cost of inventories includes all costs of purchase, costs of conversion and other costs incurred in bringing inventory to the present location and condition. This is true. Cost of inventory means what? When you purchase the inventory, the purchase price, the duties and taxes, the freight inward, the loading, unloading, all the costs will be added. After that, the cost that you are incurring to convert that inventory from raw material to finished goods, that also cost will be added. Okay, so basically whatever cost is incurred to bring the inventory to the present location and condition, everything will be added. Once you brought the inventory over here, selling is your job. Selling expenses will not be added to the cost of the inventory. Clear? Next, depreciation need not be provided in a year in which the business incurs a loss. Same like that time. Asset will be reducing, no. Whether you incur loss or not, asset will still reduce in value. So depreciation will still be incurred. Now you're like, sir, we incurred loss. That's why we never used the asset. If you don't use the asset also, there will be passage of time. Because of passage of time, the value will go down. Clear? So this is also false. Next, credit purchase of machinery is recorded in the purchase book. Credit purchase of machinery is not recorded. Credit purchase of goods and materials which you are dealing with in the business. Credit purchase of machinery. Machinery is an asset. Now, if you are doing machinery business only, then it would have been in the purchase book. Clear? Next. Section 8 company may distribute its surplus among members if the distribution is approved in a general meeting. What is Section 8 company? Not for profit organization. Can they distribute profit to the surplus here? We are distributing to members. If you are distributing surplus to members, it becomes a profit organization. No. That is what happens in sole proprietorship. That is what happens in partnership. That is what happens in company. So therefore, this is false. You cannot distribute to members. It is only for the benefit of the organization. If it's a club, sports club, you can use it for improving the sports club. If it is a hospital, you can use it for improving the hospital. Clear? Next, a cash book is both a subsidiary book as well as a principal book. Why is it called subsidiary book and principal book? It's an alternative for journal also. It is an alternative for ledger also. You won't prepare journal entry because you are entering things into cash book, and cash book looks like ledger only. So you won't prepare separate ledger from cash book. Directly the balance goes to trial balance. Clear? Next, securities premium account may be used to write off the preliminary expense of the company. Can we use securities premium? 5 uses of securities premium. One of them is you can use to write off the preliminary expense of the company. Next, matching concept is based on accrual concept. Same, no? Accrual concept tells us what? All transactions are to be recorded as and when they happen. What does matching concept tell now? Matching concept tells if you record income, expense incurred to earn that income, you should record in the same period. So that is also true. Materiality depends only on rupee amount of an item. Is it true? What is materiality? Things that are important to the reader of the financial statement, you should present to the reader of the financial statement. Is it only dependent on the rupee amount of an item? Is it only based on money? No, some things might not be based on money, but it's important to the reader. You will still tell the reader. Clear? Next, application of conservatism may result in understatement of assets and income. How understatement of assets? Application of conservatism. What does conservatism tell you? Conservatism tells you future losses should be recorded today. Future profits don't record. Clear? So they are telling if you apply this, it will understate the assets and income. Why? Because if you record future income today, then it will increase your assets today itself. But future income you can't record. You should wait for that day and then only you can record it. Clear? No. Accounting standards applicable to non-corporate entities in India are issued by central government. False. Why is it false? Because it is issued by ICAI. Okay, in such, obviously they will, ultimately it will be approved by central government. Clear? But it is issued by ICAI. So, false. Now, concept separating the owner's personal affairs from business affairs is matching concept. Which concept is that? It is business entity concept. Clear? Next, under the money measurement concept, every event affecting the business is recorded. Is it every event affecting the business is recorded? No. Every event affecting the business which can be measured in terms of money is recorded. So that's why it is false. Now, money spent to reduce the recurring working expenses may be capital expenditure. What is capital expenditure which should give you benefit? How can it give you benefit? More income comes or less expenses will be there. So if it is going to reduce the working expense, if expense reduces, income increases, that means it's giving you future benefit. It is capital expenditure. Next, cost of demolition of an old building to construct a new factory on the same site is revenue expenditure. No, it is capital expenditure. Demolishing the old building, constructing the building, building the temporary hut, Removing that hut, everything will be capital expenditure. Clear? Now, insurance compensation received for total destruction of plant by fire is a capital receipt. What got destroyed? Plant got destroyed. You got insurance compensation. Plant is what? Capital expenditure. You got money, capital receipt. Imagine your stock got destroyed. Stock is what? Stock, if you get money, that would have been a revenue receipt because stock is sitting in your trading entry. Clear? Next, debiting purchase of office furniture to general expenses is an error of omission. Office furniture you're taking instead of, purchase of office furniture you're putting into general. That means instead of capital expenditure, you have taken it as revenue expenditure. This is error of what? Principle. Error of principle. Whenever you take capital instead of revenue or revenue instead of capital, that becomes error of principle. It is not error of omission. Error of omission, you have missed something. You have taken the entry, no, but you have taken it in the wrong accounting principle. Next, bank reconciliation statement is prepared to determine the bank balance. No. It is to reconcile the bank balance that is as per passbook and the bank balance which is sitting in the cash book bank column. Clear? So this is also false. A debit balance in the cash book corresponds to an overdraft in the passbook. Debit balance in cash book means asset. For you, if it is OD, it should be credit balance in the cash book. So this is also false. Warehouse rent for storing finished goods is always included in the cost of inventory. Warehouse rent for storing the finished goods, can you add it to the inventory? What you should add to the inventory? Whatever is incurred to bring the inventory to the present location and condition. It came to the present location. After that, to store that inventory, you are paying rent to the warehouse. That will not be added to the cost of inventory. That is going to be taken as other expense. It will not be inventory. Next, under inflationary conditions, FIFO generally produces a lower cost of goods sold than weighted average. Inflationary conditions means what? Inflationary condition means price is increasing. When price is increasing, if you take weighted average, everything ka average will come. But if you take FIFO first in, first out, first in will always be at the lowest cost. So therefore, the cost of goods sold will be less compared to weighted average. Clear? Imagine 10, 20, 30. Now, if you take weighted average, all this will get averaged out. But if you take FIFO, this one will be taken. First in, first out. So the cost will be less. Clear? Now, damaged inventory must be valued at the lower of historical cost and market price. Damaged inventory, there is no future for this. It will be valued at what? NRV only. It will not be valued at cost or NRV. It will be valued at NRV. See, inventory is valued at lower of cost or net realizable value. Oh, sorry, my bad. Okay, they have used the word market price. Okay, that is why it is not market price. It is cost or NRV, whichever is less. It's not cost or market price, whichever is less. That's why they have treated it as false. Now, damaged inventory also will have cost, right? Okay, and it can be sold. Sold means what? It will be sold as scrap sales. Clear? Next. The reducing balance method. What is reducing balance method? WDV method. Can help keep the combined charge of depreciation and repairs relatively uniform over the asset life. What does it mean? Reducing balance method. See, depreciation will be, imagine 100, 90, 80, 70. It's like random numbers. But you know, in WDV method, depreciation will be in decreasing order. Think of an asset. Asset repair will be in what order? Asset repair will always be in increasing order. First year, asset repair might be less. 10, 20, 30, 40. Can you see what's happening? So they said if you use diminishing balance method, okay, overall cost will be there. No, it will be same. If you see this and this total is 110. This total is 110. This total is 110. This total is 110. Depreciation will be more in the initial years and it will be reducing. Repair will be less in the initial years and it will be increasing. So it will compensate with each other and overall our cost will be same. Now, land is invariably a depreciable asset. We don't even have to think about this. Land is not a depreciable asset only. It is false. Land usually appreciates in value. Now, a promissory note may be made payable to bearer. Promissory note means what? I am promising to pay you. It cannot be bearer. You cannot tell I am promising to pay anybody. Okay, whoever comes with this promissory note, which can be made payable to bearer. Bill of exchange can be made payable to bearer. Clear? A rebate granted by the holder on retirement of a bill before maturity is a gain to the drawee. Who is drawee? Drawee is the person who has to pay. Drawer is the person who has to get. A retirement of bill means what? You are making the payment early. If you pay early, that time you will get the discount, and discount in bills of exchange is called as rebate. So you are getting discount for paying, so it is income. Now, provision for doubtful debts is created by debiting sundry debtors account. No. Provision for doubtful debts, what will you debit? P&L account debited to provision for doubtful debts. Always P&L account debited. Provision means what? You're taking amount and keeping it aside. You're taking the profit and keeping it aside. Profit, if you have to take, you have to debit what? P&L only you have to debit. Clear? Next, provision for discount on debtors is calculated on debtors before deducting provision for doubtful debts. No, after deducting provision for doubtful debts. Think of this logic. What is provision for doubtful debts? You have doubt that these people will not pay. First you remove them. Remaining people will pay. Who will pay? For them only you will give discount. No. Are you getting it? Take the total debtors, remove provision for doubtful debts. Those are the people you have doubt that they will not pay. Remove them. Remaining people, you know they'll pay. But when they pay, they might pay early, so you have to give discount. So for them, you create provision for discount on debtors. Clear? Now, provision for discount on creditors is generally not created because of conservatism. What is provision for discount on creditors? It's like, in future, I'm going to make payment on time. That time, he will give me discount. So today only I'll record discount. Can we do that? No, because future incomes are not recorded because of conservatism. Next, debit notes issued to suppliers form the basis of returns outward book. What is debit note? What is credit note? Quickly. What is debit note? What is credit note? Over here, I have a truck. Over here, okay, and I put the goods on the truck and I told, take it. Goods went. Correct. For me, what is it? Sales. Correct. When it is sales, I will debit the debtor. Correct. I will debit the debtor. What will this person do? He has received. So he will credit the, for him it is payable. So he will credit the creditor. For him, I am creditor. So he will credit the creditor. Done. No. Now he will return the goods. What will he do? He will return the goods. When he is returning the goods, he'll tell, I am returning the goods, so I don't have to pay you. So what will he do to my account? My account was credited over here, so he will now debit my account. So he will tell, I am debiting your account, so I am giving you a debit note. I received the goods. After receiving the goods, I cannot tell, no boss, you have to make payment to me. So I'll tell, okay, I'll credit your account and I'll give you a credit note, telling that I am going to credit your account. Here, debit note is given when the goods are going out. That means it is returns outward book. When the goods are coming in, it is credit note. Clear? So this is true. Next, all nominal accounts are balanced at the end of the accounting year and their balance are carried forward. Nominal accounts, they are not balanced. Where do they go? They go to trading or P&L account. So they are always going to become zero. False. Next, outstanding salary relating to previous year, if still unpaid, continues to appear as liability in the current balance sheet. Is it true? Last year only it was outstanding. This year also we didn't pay. Still the liability will be there. Imagine loan was there last year. You didn't pay 1 rupee this year. Still loan will be there. No, same way. Now, income and expenditure account includes receipt and payment of both capital and revenue nature. Income and expenditure account includes only revenue items. It will not include capital items. What will include capital items? Receipt and payment account. Clear? Next, profit or loss from a separate trading activity of an NPO is transferred to the income and expenditure account on consolidation. Is it true? Yes. One question is there in the study material, that college question. Big question of college. Store sales. Don't remember. It is there in the study material of NPO. Store sales is there. So NPO usually should not make sales. No. So here they are telling profit or loss on separate trading activity. Now college or school is this thing. What is that? It's a non-profit organization. But college will have one stores. That store will make profit. That profit will be transferred to income and expenditure account. Clear? Next, life membership fees must always be treated as revenue expenditure because membership continues for many years. No, life membership fees you are paying for only once. No, annual membership fees you can pay again and again. But life membership fees you will pay only once. It is non-recurring in nature. So it is capital, not revenue. Clear? Each year end adjustment normally has two effects in the final accounts of an NPO. Final accounts of anybody, year-end adjustment will always have two effects. Why? Adjustment means it is not entered. If it is not entered, now we have to enter. When we enter, we follow double entry system of accounting. So it will have two impacts. Now, nominal accounts are ordinarily maintained under a pure single entry system. Nominal accounts are what? Expenses. Expenses, are they maintained under single entry system? No, it is always under double entry system only. Any nominal, personal, real, everything is under double entry system of accounting. In the absence of a partnership agreement, profits and losses are shared in the partner's capital ratio. They are shared in what ratio? They are shared equally. Next, a partnership firm may acquire fixed assets in the firm's name. Can they acquire fixed assets in firm's name? Yes, but that firm is represented by the partners. Clear? Now, on admission of a partner, profit or loss on revaluation is transferred to all partners in the new profit sharing ratio. It is transferred to whom? Old partners in the old profit sharing ratio. Now, on the death of an insured partner, the firm receives only the surrender value of the joint life policy. On the death of an insured partner, firm will receive the full amount, policy amount. Clear? On the retirement of a partner, firm will receive what? Surrender value. Now, a person who holds preference shares of a company is prohibited from holding equity shares of the same company. There is nothing like that. You can hold preference shares, equity shares, debentures. You can become creditor also. Nobody is going to stop you. Next, a company can issue ordinary equity shares to the general public at a discount if shareholders approve it by special resolution. No. Shares issue at discount is prohibited. Share issue at discount can only be done in case of sweat equity shares. And sweat equity shares is not for general public, it is for employees. Clear? Next, application money on issue of shares must be at least 25% of the issue price. Is it true? Is it 25%? It is 5%. Application money should be how much? 5%. 10 rupee share, at least 50 paise you should collect at application stage. Okay. If this is true, so many of your questions only will be wrong. No. Application 2, allotment 3. Clear? Next, debenture interest is paid only after preference dividend because both are appropriation of profit. No, debenture holders are outsiders. Outsiders you will pay first. Preference shareholders and equity shareholders are insiders. Preference is only when you are paying between equity and preference. Preference word is only between equity shareholder and preference shareholder. Debenture interest is paying interest on loan. That will be paid first. It will not be paid after preference. It will be paid before preference. Next, a fixed charge ordinarily covers all present and future assets of the company. What is fixed charge? It's actually a company law question. Okay. See, fixed charge attached to specified asset. What is fixed charge? Fixed charge and floating charge. Two things are there. Okay. Fixed charge, it is attached to specified asset. Floating charge on all the assets. A floating charge generally covers a changing class of present and future asset. Fixed charge, they said, what covers all present and future assets. It's only on current assets which is there. I think, do you have it in company law? No, it's not there. Now, debenture suspense account. Debenture suspense account is shown as liability in the balance sheet. Is it shown as liability in the balance sheet? It is shown as asset in the balance sheet. When does debenture suspense account come? When you issue debentures as collateral security. Debenture will come on the liability side. So, suspense should come on the asset side. Now, a present obligation of uncertain amount that can be reliably estimated is a provision. Present obligation which can be estimated is provision. Present obligation, okay, but which cannot be estimated. Or a probable obligation is what? Contingent liability. Probable obligation, possible obligation, it's all contingent liability. Present obligation is there of uncertain amount, but you can estimate it. It becomes provision. Now imagine they change the words. Present obligation, uncertain amount, but cannot be estimated. If it cannot be estimated, what it will become? Contingent liability. Clear? Now, an accounting policy may be changed whenever management prefers to another method. No, it can be changed when it is required by statute or law, when it is required by accounting standard, or it is required for better presentation of financial statements. Clear? Now, customer have no interest in the financial statement of a business. Remember, users of financial statement, supplier, customer, employee, investors, public, government, everybody are users. Now, bookkeeping and accounting are synonymous terms. Is bookkeeping and accounting same? No, bookkeeping is what basically? Just entering the transactions. That is bookkeeping. Accounting is what? The entire process. After bookkeeping, you'll go on to the next stage and you'll prepare financial statement also in accounting. Now, under the going concern assumption, assets are normally valued at forced sales value. Going concern means what? Business is always going to continue. We don't have any plan of shutting the business. So under that case, what will you do for assets? Assets will always be shown at cost. Remember, cost concept is also there for assets. Asset will always be shown at cost. Now, under accrual accounting, income is recognized only when cash is received. Under accrual accounting, do you record income only when cash is received? You will record income when the transaction happens. Clear? Now, prudence, substance over form, and materiality are major considerations in selecting accounting policy. Is it true? Remember, there is one small paragraph in your chapter number 1, points to be considered for selecting an accounting policy. Prudence, substance over form, and materiality. What is prudence? Prudence and conservatism are same. Future losses should be recorded. Future profits should not be recorded. What is substance over form? Don't go by the legal reality of the transaction. Go by the economic reality of the transaction. And what is materiality? Whatever is relevant to the user of the financial statement to understand or to take decision, all that should be provided. All information should be provided. Next, wages paid to install new machinery are revenue expenditure because wages are normally expense. Is it true? No, it is capital expenditure. Ordinary repairs after an asset has been put to use are normally capital expenditure. No, ordinary repairs are for maintaining. That will be revenue expenditure. But if at all you do some repair and it boosts the capacity of the machine, then it will be capital expenditure. Now, goods withdrawn by proprietor for personal use are debited to drawings account at cost. What is the entry for goods withdrawn by proprietor? Drawings account debited to purchase account. Next, goods distributed as free samples are treated as sales at selling price. Goods distributed as free samples, what is the entry? Free samples account debited to purchases, but again it is at cost. Okay. Now they're telling it is treated as sales and all. Cash sales of goods are recorded in the sales book. No, cash sales of sales will go into which book? It will go into cash book. Now, credit sale of an old office computer. Old office computer becomes what? It is an asset. Okay, is recorded in the sales book. No, it is not recorded in sales book. Credit sale of old office furniture. If it is for cash, it will go to cash book. If it is on credit basis also, it will go where? It will go to journal proper. Now, ledger is known as the principal book because it classifies transactions account-wise and supplies balance for the trial balance. Yes, ledger is the principal book and journal is the primary book of accounts. Now, complete omission of a transaction from the books causes disagreement of trial balance. If you miss the entry, how it can cause disagreement? Complete omission makes the trial balance tally. Partial omission ensures that the trial balance will not tally. Clear? A compensating error may remain undiscovered even when the trial balance agrees. Compensating errors. If trial balance would not agree, that time you would search for the error. If trial balance agrees, that time compensating errors, errors of complete omission and errors of principle might still be there. In trial balance unit itself, you have those questions where trial balance is tallying, but they are telling that there are errors. Now, checks issued but not presented normally makes the passbook balance higher than the cash book balance when both are favorable. Checks issued, not presented. Which balance will be more? Cash book balance will be more because here you have entered. Passbook you didn't enter only. Now, a check deposited but not collected has already increased the passbook balance. Check deposited, not collected has increased the cash book balance. Passbook, no change at all. Inventory is generally valued at lower of cost or NRV, whichever is net realizable value, item by item. Obviously, item by item, one cost is lower, that will be taken. Other one, NRV is lower, that will be taken. Clear? Abnormal wastage of material and labor forms part of inventory. Abnormal wastage will not be taken because that was under your control. It was avoidable loss. That will not be taken as cost of the inventory. Normal loss, if it is there, that will be part of cost of inventory. Now, selling and distribution cost are included as inventory cost. It should not be included. Why? That time I told you, inventory, what you will add only till you bring it to the present location and condition. Now it is ready for sale. After this, whatever is there, it is expense. It will go to P&L. Now, depreciation is a valuation process intended to show an asset at market value each year. Is it to show the asset at market value? No, it is just to record the asset. Okay, what are the reasons why we show depreciation? To show correct income, correct profit, to show the real position, to do it because government is telling us to do it. And then last one is what? To save money to buy a new asset in the future. Now, a change in method of depreciation is treated prospectively as a change in accounting estimate. Is it change in accounting estimate? Yes. If they give the same question, it will become false. If they tell you it is treated retrospectively. Retrospectively means what? Today I change the method of depreciation. I will give effect from 3 years ago. Today if I change method of depreciation, I should give effect from where? From today itself. Clear? Days of grace are added to a bill payable on demand. Bill payable on demand means what? When I come and ask you, you should give me the money. For that, after when I come and ask you, you cannot tell no, 3 more days grace is there. For bill payable on demand, there is no 3 days grace. For other bills, obviously there is 3 days grace. Now, if maturity falls on public holiday, the bill is due on the preceding working day. That means previous day. If maturity falls on emergency holiday, it will be on the succeeding day. That means next day. Noting charges paid by the holder on dishonor are ultimately recoverable from the drawee. Noting charges. You did not pay the bill on time. I went to lawyer. I paid his charges. Do you think I'll take that noting charges and put in my P&L? No, I will recover it from you itself. Now, closing inventory given outside the trial balance appears in both trading account and balance sheet. Closing inventory outside the trial balance. Closing stock adjustment of final accounts. What will you do? Trading account credit and balance sheet asset. Now, an outstanding expense is deducted from the related expense and shown as asset. No, outstanding expense is added to the related expense and shown as liability. Now, income received in advance is added to current period income and shown as asset. Income received in advance is deducted from the current period income and it's shown as liability. Clear? Do you remember NPO? So many times subscription received in advance. What will you do? Minus, and you'll show it in the balance sheet as liability. Now, receipt and payment account begins with opening cash and bank balance and ends with closing cash and bank balance. It should know, because receipt and payment account is what? Cash book only ultimately. Now, depreciation is ignored in income and expenditure account because it involves no cash payment. Depreciation 100% involves no cash payment. It's a non-cash expense. But is it ignored in income and expenditure account? Income and expenditure account is almost like P&L only. Can you ignore it? If you ignore it, you will not get the true profit. Okay, you can't call it as profit, true surplus or deficit. So next, statement of affairs is identical to a balance sheet in reliability and underlying records. Is it same like balance sheet? Where do we see statement of affairs? Accounting from incomplete records. Okay, why statement of affairs and balance sheet are same? No, if it was balance sheet, we would have called it as balance sheet only. When do we call it as statement of affairs? I don't have ledger balances. Without ledger balances, from limited information, I am preparing the balance sheet. That time I will call it as statement of affairs. If I have ledger balances, balances will go to balance sheet. If I maintain books of accounts only, I'll have balance. No, I don't have books of accounts itself. That's why it is called as statement of affairs. It is not identical in reliability. It is less reliable. Okay, because I don't have information, it is less reliable. You can see over here, making it less reliable. Now, next, under the super profit method, goodwill equals normal profit multiplied by years of purchase. If normal profit into number of years of purchase is super profit, what is the formula for super profit? Super profit into number of years of purchase. Clear? How do you get super profit? But average profit minus normal profit. Next, a new partner compensates old partner in the sacrificing ratio for goodwill acquired. Not only, it is true, but not only new partner, all the gaining partners will compensate the sacrificing partners. Next, continuing partners compensate a retiring partner for goodwill in the gaining ratio. Continuing partners are the one who is going to gain, who is going to retire, that fellow is going to sacrifice. So obviously in gaining ratio will compensate them. Now, the deceased partner's share of profit up to death is credited to deceased partner's capital account. Very correct. Deceased partners, okay, if partner retires, do we give share up to the date of retirement? No. But if partner dies, we'll give share up to the date of death. It is credited to capital account, but what is it debited to? P&L suspense account. It is debited to P&L suspense account. Realization account determines profit or loss on dissolution of the firm. Only in dissolution we prepare realization account and we get the profit or loss, and that profit or loss is transferred to the partner's capital or partner's current accordingly. Now, share capital account is debited with the called up amount when shares are forfeited. When shares are forfeited, equity share capital is debited, not at face value for the called up amount. Face value can be 10, but till now we have called up only 6. Then you have to debit only 6. Now, maximum discount on reissue of forfeited shares equal to the forfeited amount available on those shares. What is this, by the way? Maximum discount, how much I can give? Last person gave 4 rupees. Okay, I forfeited his shares. So next person I can give discount of 4 rupees. Clear? That time what will happen? Last person gave 4 rupees. Next person I give discount of 4 rupees. So next person will pay 6. So 4 here, 6. Their total face value will be 10. Clear? A bonus issue results in an immediate cash inflow to the company. Bonus issue is shares issued for no consideration. So therefore there is no cash inflow to the company. Next, a right issue is first offered to existing equity shareholders proportionately. What is right issue? Shares offered to existing shareholders for a consideration which is little less than the market. So obviously this is also correct. creation of debenture redemption reserve itself provides cash for redemption. They're telling you create DRR, that's enough. That will provide cash. Is it true? No. Why? According to the rule, no. How much DRR you are going to provide? Only 10%. 10% DRR if you keep, how 100% of the loan can be repaid? It is not enough to provide the cash for redemption. Yes, that should be it, guys, with the true or false. Okay, 100 true or false. Revise it and all the best for your exams. Write true or false first only, so that if out of 6, no. At least if you get 4 right also, it's quick marks. Then you can go to the other things. And anyways, it's compulsory, so you have to write it. So wish you all the best, guys. Bye. See you. Bye.